from now, all bets are off. Then they don't make the investments in the first place. They don't expand their business. They don't need more workers, therefore, and wages don't go up. Now, why do we want to prevent the wages from going up? This is a very bad idea. We should reject the amendment.
Chairman,
Senator Brown, I'd like to.
Senator Brown. Thank you, Mr. Chairman. I go back again to the historic meeting in the White House with the 5 most important Democratic senators on this committee, and Senator Wyden in attendance. And I'm sorry for those that didn't get invited. But you always learn something in this world. And what I learned from that meeting was I saw the playbook on how President Trump and majority Republicans were going to sell this tax cut, because they fundamentally, intuitively know, all of you do, that the public always knows that when Republicans are in power, the first thing they want to do is give tax cuts to the rich. That's just it's in their DNA. It's what they're going to do. We know that. So they fundamentally, and the chairman laughs, but he knows over 40 years it's always true. But the public fundamentally, just intuitively, almost viscerally understands that that's what they're going to do. So the tax cuts are not really going to be for the middle class, no matter how many times they sing that song. So the Republican strategy in the White House, and I know the president doesn't always follow the exact script that Senator McConnell and Speaker Ryan write for him, but the president said, I'll bet you 5 times, and it was mimicked by a whole bunch of my colleagues, that wages were going to go up $4,000 each for American workers. Some will go up as much as $9,000. They said it over and over again. And they kind of have this bank shot. You give tax cuts and the tax, hard to understand. But then you think about this. A dozen years ago when you did the tax holiday here, all the corporations had all this money, and of course they were going to be eager to give it out to work. Well, actually, they didn't give it out to workers. They did stock buybacks. They did executive compensation. They paid out in dividends. Then somebody cited Britain. Great Britain has done a series of tax cuts, and their wages were flat too. So this is really wishful thinking. But I do know that the TV ads that are going to be run against the 5 most important senators on this committee, the TV ads that the independent groups will run, will of course say, Senator McCaskill and Senator Casey and Senator Stabenow and Senator Nelson are voting against a $4,000 raise that this tax cut is going to bestow on them. We know it's coming. We know you'll have way more money to promote that than we will have to defend it, but that's why the Wyden Amendment is so important. And I just think it would be nice just tonight, before we go home, to just acknowledge, well, this tax cut really is not for the middle class, it's for the rich. And that whole thing about higher wages, well, it's a good selling point, but we know companies don't just give away higher wages. They just don't give away higher wages just because they have more money. Corporations are sitting on a lot of money now. They're sitting on a lot of profits now. I don't see wages going up. So just spare us the bank shots, spare us the sarcasm and the satire, and
I'm going to spare it, but I'm going to just say to you that I come from the poor people, and I've been here working my whole stinking career for people who don't have a chance. And I really resent anybody saying that I'm just doing this for the rich. Give me a break. I think you guys overplay that all the time, and it gets old. And frankly, you ought to quit it.
Mr. Chairman, the public believes it.
I'm not through. Okay. I get kind of sick and tired of it. True, it's a nice political play.
Well, Mr. Chairman,
it's not true.
With all due respect, I get sick and tired of the richest people
Regular
in the
order,
country
Mr. Chairman.
getting richer and
Regular order.
richer. We do a tax
Regular order.
Middle class
Wait a minute.
Regular order.
And over and over again. How many times do we do this before we learn this?
Listen, I've honored you by allowing you to spout off here. And what you said was not right. That's all I'm saying. I come from the lower middle class originally. We didn't have anything. So don't spew that stuff on me. I get a little tired of that crap. And let me just say something. If we worked together, we could pull this country out of every mess it's in. And we could do a lot of the things that you're talking about, too. And I think I've got a reputation of having worked together with Democrats.
Let's start with Chip.
I'm not starting with Chip. I did it. I've done it for years. I've got more bills.
Start with Chip today.
I got more bills passed than everybody on this committee put together. And they've been passed for the benefit of people in this country. Now, all I can say is I like you personally very much, but I'm telling you, this bull crap that you guys throw out here really gets old after a while. To do it right at the end of this was just not right. And it takes a lot to get me worked up like this.
Call the roll.
Let me call the roll on the, what are we on?
The Menendez amendment.
On the Menendez amendment, let's call the roll.
Grassley, no.
Mr. Grassley, no. Mr. Crapo.
No.
Mr. Crapo, no. Mr. Roberts. Mr. Roberts, no. Mr. Enzi. Mr. Enzi, no. Mr. Cornyn. Mr. Cornyn, no. Mr. Thune. Mr. Thune, no. Mr. Burr. Mr. Burr, no. Mr. Isaacson. Mr. Isaacson, no. Mr. Portman. Mr. Portman, no. Mr. Toomey. Mr. Toomey, no. Mr. Heller. Mr. Heller, no. Mr. Scott. Mr. Scott, no. Mr. Cassidy. Mr. Cassidy, no. Mr. Wyden.
Aye.
Mr. Wyden, aye. Ms. Stabenow.
Aye.
Stabenow, aye. Ms. Cantwell.
Aye.
Ms. Cantwell, aye. Mr. Nelson. Mr. Nelson, aye. Mr. Menendez.
Aye by proxy.
Mr. Menendez, aye by proxy. Mr. Carper. Mr. Carper, aye. Mr. Cardin. Mr. Cardin, aye. Mr. Brown. Mr. Brown, aye. Mr. Bennett. Mr. Bennett, aye. Mr. Casey. Mr. Casey, aye. Mr. Warner. Mr. Warner, aye. Mrs. McCaskill. Mrs. McCaskill, aye. Mr. Chairman.
No.
No.
Mr. Chairman, no.
I'm so upset I can't even say no.
Mr. Chairman, the final tally is 12 ayes, 14 nays.
The amendment fails. Now I have a manager's amendment. It's called Hatch Amendment number 25, modified, that includes a series of technical fixes and clarifying changes to Mark, as well as a small handful of accepted member amendments. Mr. Bartfeld, please walk us through the manager's amendment.
Quickly.
But Mr. Chairman, I'd like to echo I'd like to echo the chairman's request. We need this summary. We just got a draft to it. There are a lot of changes in it. We haven't had any time to review the changes. We haven't had a chance to ask any questions. As far as I can tell, folks on the other side went in the back while we were taking these votes, and they've been talking about making these changes. And it seemed to me that would have been a natural opportunity to talk about ways to find common ground. So it looks to me like the last hour or so on this reinforced the partisanship here. And so, Mr. Bartold, we need you to take us through what these changes are. We may have some questions.
It's an earmark.
Let's move on. I have to say that we did walk your staff through it, so it's
Mr. Chairman, this is the first I've heard of it.
well, that's not my problem. I mean, I get it from my staff. You can get it from
No,
yours.
that's not true. Our staff didn't have it. Nobody had this. Nobody had it.
Clerk will call the roll.
What?
There's no roll. Chairman, there is no roll.
Object. Are you kidding?
Mr. Chairman, you asked.
Oh, I'm doing the walkthrough. I'm sorry.
Right.
I'm so upset.
Right.
I'm so upset that let's do the.
That'll be fine.
Mr. Chairman, members of the committee, the chairman's modification begins with a modification to the transition rule to the change in the mark on section 162M that relates to binding contracts. It makes a clarification that the excise tax on investment income of private colleges and universities, it clarifies the related party rule provision of the underlying provision in the mark. It makes another clarifying amendment with respect to partners' shares of charitable contributions and foreign taxes paid. It also adds a clarification that the limitation on the deduction of net interest expense for which there's an exception for regulated public utilities also applies in the case of certain electric co-ops. It clarifies, or it excludes, I should say, that the accumulated foreign deferred earnings from the REIT gross income test for the purpose of the transition rule on the transition to the participation exemption system. It makes a modification to the Mark's underlying proposal with respect to the orphan drug credit, changes the credit rate to 27% and strikes certain limitations on expenses related to drugs that had been previously approved under the Food and Drug and Cosmetic Act. I'm not sure if the written document before you has a line that relates to the net operating loss deduction. If it does, I was informed that that's in error, that there is no change to the chairman's mark as modified with respect to the net operating loss deduction. So if you have your pen, you can strike that from your copy. The chairman's mark has modified although I mentioned it in the walkthrough, the description of the amendment in the mark did not have an effective date for the change with respect to meals provided for the convenience of the employer. This is only clarifying for the written record that would be effective for taxable years beginning after December 31st, 2025. The amendment also then adds a reporting requirement for research and experimentation expenditures beginning after December 31st, 2024. This is in relation to the amortization of research expenses. The cost basis of certain securities, it changes it changes first in, first out rule with respect to mutual funds, regulated investment companies. There are certain additions, so these are new starters as opposed to modifications. It extends the free file program for the IRS. It provides two changes to unify, two changes with respect to whistleblower programs. One is it treats whistleblower awards other than those of whistleblowers with respect to the IRS as allows them above the line treatment for attorneys' fees and court costs paid in connection to it. So it's conforming the treatment in other areas where there are whistleblower award possibilities to the present law treatment that's accorded to whistleblower awards in the case of in a tax case. It allows it modifies the definition of collected proceeds with respect to awards to be a little bit broader, effectively making a mandatory the whistleblower programs under areas again other than the IRS. It increases the excise tax on stock compensation of officers in inverted corporations. It disallows deductions for lobbying expenses with respect to lobbying before local government bodies. Let's see. It adds a new requirement for corporate taxpayers that pay dividends to shareholders, such that there's a requirement to report the total amount of dividends paid during a taxable year and the first 2.5 months of the succeeding year. That'd be effective starting after 2018, so a year's lead time. And it imposes a 3-year holding period requirement for qualification of long-term capital gains with respect to partnership interest received in connection to performing services. This is related to carried interest of certain investment partnerships. And then I believe the last item makes some technical changes to the provision in the makes some changes to permit distribution from retirement plans without penalty and to provide essentially above-the-line treatment for casualty losses with respect to the Mississippi River Delta flooding of, I guess that's a year and a half ago.
Bill.
Mr. Chairman.
That concludes the.
Mr. Chairman, I have several questions.
I'm sorry, Senator White. I forgot one thing. Also, it does make a modification to in the underlying mark would reduce the historic rehab credit's value by 50%. The chairman's amendment and this was not typed in what was handed out to you, it would restore the full value of the credit, but it would make a modification to say that the credit may be claimed, the credit allowable would be claimed by taxpayers in four equal pieces over the four succeeding.
Is that written here? No.
I just said it was not written there.
All right, so we've got yet another major set of changes, including things that weren't written down. Mr. Abraham, was the Democratic staff consulted in the development of this? I understand apparently you were shown it here after it was written, but in the development of it, were the Democratic staff consulted in any of it?
No, we were not.
All right, so colleagues, once again, the partisanship is stark. It's obvious. This was another opportunity here late at night when we were voting for there to be discussion between Democrats and Republicans about how we might find some common ground. We didn't get it. Now, Mr. Bartold, I listened to you, and you went through a lot of things, and I couldn't find, just from my ear, a whole lot that would help middle-class families. I heard about the free file program, and that struck me as something that would be useful, and Senator Nelson has been a leader in that. But I heard an awful lot that I can tell you a lot of lobbyists who are following this are paying attention to. Could you just give me a sense whether anything else is there that helped the middle class?
Perhaps, Senator Wyden, the second to last item that I mentioned related to the disaster losses in the Mississippi Delta flooding. A number of the
Mississippi only, right? I mean, we got clobbered in the West, with fires and the like. That's for the Mississippi, right?
This is just specific to that area.
Okay.
Well, okay. Thank you. My colleague says it's not just the state of Mississippi. There's also parts of Texas.
Again, I want to come back to this. We heard that we're getting brand new material here at 10 o'clock at night, Democratic staff not consulted. I think all of us, at least on our side, were trying to listen because we didn't know what was in it. Sure looked like a lot of stuff that was important to lobbyists and not a whole lot that's going to matter to the middle class. Mr. Chairman, I think that kind of sums it up. I think you have a closing statement. I do. Some of my colleagues, I think, have questions as well.
Well, let me just, I'll give a closing statement if you have one.